The Russian central bank is going to war. I could talk about hours what happened last week between Ukraine and Russia and the importance of closing out Russia from the SWIFT payment system, but you are here because of gold, so I'm going to explain the single and most important things you need to know right now. So Russia is officially at war with Ukraine, but war isn't limited to one physical place on the battlefield. It can be served in many different dimensions, levels and forms. And in our case we are talking about currency war. And during an economic turmoil, a government strives to maintain stable exchange rate in order to provide financial and economic stability. Now this is where the central bank comes in and helps this gold in order to avoid exchange rate fluctuations. So central banks have huge amount of foreign currency reserves and other assets as well, such as gold, which they're not afraid to use when the shit hits the fan. Now Russia is expected the sanctions and they had enough time to fill up the reserves, and here comes the exciting part. In order to protect the ruble from becoming rubble, they can sell off these reserves as they deem necessary. Now this includes gold, and Russian central bank has the 5th largest gold reserves officially. We don't know how much they have unofficially. And they can sell it off any time. And guess what? Next in line is China, who has some mutual interest with Russia. So the current geopolitical shizzle is going to be tough for Russia, but they are prepared to sell off any of the reserves and currencies and gold or whatever they have in the inventory in order to protect financial stability. So this is the most bearish scenario we could ever imagine, which may or may not play out, but currently Russia is buying more gold on the domestic market because they were banned from some of the international markets. But then we have to look on the other side of the story, where investors and traders are going to favor gold with all the shizzle in the global economy, and plus we have to factor in something really important, which is inflation. Remember that inflation is still with us. So there is a possibility that traders and investors are going to run into safe haven assets such as gold, which is extremely bullish in the longer term. Now, truth to be told, no one in the whole world has enough intel to explain or forecast what's going to happen with the gold or any other financial markets today or tomorrow or next week. But at least you now understand some of the dynamics which are currently playing out and understand the reality that you have to use stop loss to protect your capital. So when the market drops hard, your trend line and smart money concept isn't going to last long. So stick with the smart guys and step on the sideline and just observe the markets and wait for the right opportunities. Check any of my live trading session on YouTube and you're going to see the results. Patience pays off really well. So now that we discussed some of the fundamental things, let's have a look on the technicals. Stay tuned, it's coming. Starting off with the daily time frame, you can see that this bearish trend line was finally broken back at the beginning or middle of February when Russian troops started to go into Ukraine. It was a slight retest, but it wasn't enough because suddenly gold skyrocketed all the way to 1980 when things escalated in Ukraine, in Donetsk and Luhansk. And as we progress into the week, you can see there was a massive profit taking. So all the way from 1974, 1980, traders started to lock in profits. But it's also another speculation that the Russian central bank wanted to show that what they are capable of on the commodities market. They just sold off a massive chunk of their gold reserves in order to protect the ruble. When we had the sanctions coming out on the market, the Russian central bank hit back to Joe Biden and all the other countries, sold off a massive amount of gold from the reserves, and apparently that's a speculation that this caused gold to plummet from 1980 below 1900, which is substantial. It's a huge drop. I mean, $100 whiplash. I'm so glad that I didn't trade Thursday and Friday, because if there's no trading, there's no loss. And to be honest, no one could saw this massive drop on the market because all the fundamentals were pointing into the direction that gold is going to higher and higher. But every impulse move is followed by a retracement, as we always say, and you can see that gold, after this impulse move to the upside, is now coming back to retrace. So the only thing we need to find out, where is it going to retrace? Now, I'm not trying to guess the reversal where gold is going to continue higher, but we have some good chances that if we can pinpoint those exact levels, then we have to move down to lower time frame and see what price action gives us. But before we move down, let's grab the Fibonacci and put it from the beginning of the impulse move, which was below the bearish trend line. We're putting the Fibonacci below the bearish trend line and to swing high the next point, and you can immediately see that 7860 Fibonacci level at 1854 lines up exactly with the weekly support levels on the pivot lines, as well as the previous weekly open. And guess what? If you look left, there is clear resistance and support on the chart. So now we have 3 to 4 confirmations that price is going to retrace back all the way to 1854. And now we're moving down to the 4-hour time frame, where we have more candles there for more information and data, and then we can fine-tune our high time frame analysis. The next thing we see is that price is currently sitting on this trend line, which we drew a couple of weeks ago when gold started to create this nice and bullish market structure. So we started off on the higher time frame, and you saw exactly that price was expected to come back to the previous weekly open at 1854. Let's round it up to 1850. Well, we have multiple confirmations. So this means that from the current price level all the way down to where we're expecting price to drop, we have 391 pips gap. And luckily we also have a trend line which is inviting gold price to break. So the first thing you need to watch, we have the ultimate target or the level where we're expecting price to drop. Then we have a trend line which is most likely will break at the beginning of next week. And then we also have a weekly pivot point from last week. So now that we identify the key levels, we have to go down to lower time frame and monitor price action. So the first thing is we're going to mark the target level, which was around 1854, 1850. The second thing is we want to make sure that the trend line is nicely lined up and tugged along with the candles on lower time frame. The second thing we have is the weekly pivot point nicely drawn on the chart. The third thing, you want to draw the forecast on your chart so you can expect the price movement and you have clearly defined start and end point. So as I mentioned, the difference between the current price level and the target level is around 350, 391 pips, which is decent. So the next thing you want to do is wait this trend line to break and then get your Fibonacci tool from swing high to whatever it will be the swing low, and then look for the reversal point, because the Fibonacci retracement is an excellent tool to pinpoint the retracement levels. And trust me, this trend line is most likely will be broken next week. Wait for the retest, look left on the chart for support and resistance, get your Fibonacci, get your RSI, whatever tool you use at your disposal, get it, try to find the reversal point, and if price continues to the downside, just need to find that sweet spot and continue the ride all the way to downside to 1850, which is about 350, 390 points. But I don't know which day is it going to happen, so the first thing I want to do is don't trade Monday morning. I want to see what price is doing on a higher and lower time frame, and then we're going to do the usual daily morning briefing we should do every single day, Monday to Friday, from the team members. We have 8 a.m. UK time morning briefing where we prepared for the market, sum up every potential scenarios for major currency pairs, gold and US 30. Now in the last couple of weeks I only traded US 30 and gold because those gave me the most profits in the past couple of weeks. So the first thing in the morning we're going to do is have a look in the markets, have a look on the gold market, what it's doing, and as soon as these levels and these confirmations slowly break down, I'm going to look for an entry point and an analysis which I'm going to send out to the team so they can have a nice sharp sniper entry, whichever level it will be. So this is the kind of scenario I'm expecting for next week. I'm fairly bullish on the higher time frame if you go back to the daily chart, because we broke many important resistance levels, for example 1830, 1854, and then every single resistance level was broken last week because of the sad situation in Ukraine. So longer term, I'm absolutely bullish on gold, but short term you can see that we have some downside which we need to fill all the way from the current price level to 1854. So this week, at the beginning of this week, Monday and Tuesday, I will be focusing on the short opportunities, and as soon as price fills this set up, then I'm going to shift into the bullish mood and look for bullish opportunities. I hope you enjoyed the video, guys. Please smash the thumbs up button, subscribe to the channel, and see you next week. This is the Alpha FX.